The chart shows the technical analysis of the iShares Russell 2000 ETF, or IWM, on a weekly time frame, representing the performance of small-cap stocks in the United States. The chart includes multiple indicators and annotations, giving insights into the trend and potential future movement of the ETF. 1. Price movement and EMA indicators. Current price IWM is currently trading at approximately $224.23, with a weekly increase of plus 2.40%. Exponential moving averages, or EMA. The 50-week EMA is at approximately $207.09, and the 100-week EMA is around $199.73. The current price is above both the 50-week and 100-week EMAs, which signals a bullish trend. The position above these EMAs suggests ongoing positive momentum. 2. Relative Strength Index, or RSI. Current RSI value, 58.98, with a yellow reference line at 57.31. Interpretation: an RSI value above 50 suggests bullish momentum. At 58.98, the RSI indicates that IWM is in a healthy uptrend, but is still below the overbought threshold of 70, suggesting there is room for further upward movement. 3. Williams %R indicator. Current value. The Williams %R reading is negative 9.65. Interpretation: the Williams %R oscillates between negative 100 and 0, with values closer to 0 indicating overbought conditions. A reading of negative 9.65 is close to the overbought range, suggesting strong buying interest. However, this value might imply a near-term pullback or consolidation if it persists. Moving on to the MACD, or Moving Average Convergence Divergence. The current MACD line stands at 5.07, while the current signal line is at 5.04. The MACD histogram is positive, with green bars indicating a slight bullish divergence. This means that the MACD line is above the signal line, which is a bullish signal. The histogram's positive values suggest that momentum is leaning towards the upside, but since the lines are very close, it indicates that momentum could shift easily. Let's summarize the trend and analysis. The overall trend shows a bullish outlook for IWM, with the price trading above the 50-week and 100-week EMAs. This upward trend is supported by the RSI and MACD indicators, both showing positive momentum. In the short term, although the Williams %R is nearing overbought territory, the RSI suggests there is room for further upside. If the trend continues, we may see additional gains in the short term, but a minor pullback could occur due to the Williams %R level. For the medium to long term, as long as IWM remains above the EMAs, the bullish trend is expected to continue. The MACD's positive histogram and crossover indicate potential for further upward movement over the coming weeks. In summary, this chart analysis indicates a bullish outlook for the iShares Russell 2000 ETF, with positive momentum in the short and medium term. However, overbought conditions in the Williams %R suggest that investors should monitor for potential consolidation or a slight pullback before further gains. Now, let's talk about price movement and EMA indicators for the VIX. The VIX is currently at 15.74, down by 6.14 points. marking a sharp decline of 28.06%. Regarding the exponential moving averages, the 50-week EMA stands at 16.40 and the 100-week EMA is at 17.02. The VIX is trading below both the 50-week and 100-week EMAs, indicating a period of relatively low volatility expectations, suggesting that the market is currently in a calm state. Relative Strength Index, or RSI, is currently at 47.93, with a reference line at 54.27. An RSI below 50 indicates weak momentum. At 47.93, the VIX's RSI reflects a relatively low level of volatility, suggesting that market participants are not expecting extreme price swings in the near term. Williams %R indicator is at negative 97.50. The Williams %R scale ranges from negative 100 to 0, where values near negative 100 indicate that the asset is oversold. A reading of negative 97.50 suggests that the VIX is oversold, reinforcing the current period of low volatility expectations. This could signal a potential bounce in volatility if external factors trigger increased market uncertainty. MACD, or Moving Average Convergence Divergence, is an important indicator to consider. The current MACD line is at 1.14, with the signal line at 1.12. The MACD histogram is slightly positive, indicating minimal bullish or bearish momentum. This means the MACD line is very close to the signal line, and the histogram is flat, suggesting that there's little momentum in either direction. This aligns with the calm market environment indicated by the low VIX level. Annotations are essential for understanding the context of any analysis. Labels such as Huijn's Investments and VIX denote that this chart is part of the Huijn's Investments analysis, focusing on the VIX. Additionally, the date annotation of November 5, 2024 shows the date for this specific analysis, providing context for post-election insights. Let's dive into the trend summary and analysis. The overall trend shows that the VIX is in a downtrend, with the current level well below both the 50-week and 100-week EMAs. This trend indicates a period of low volatility expectations, suggesting that the market is experiencing stability and a lack of immediate fear or uncertainty. In the short-term outlook, given the oversold reading on the Williams %R, there could be a short-term increase in volatility if an external catalyst arises. However, the current calm environment may persist in the absence of such a trigger. For the medium to long-term outlook, as the VIX remains below the key EMAs, the trend suggests that market participants expect a stable environment for the foreseeable future. This stability may continue unless there's a significant event that raises uncertainty, such as unexpected economic data or policy changes following the election. Now, let's consider the impact of the VIX after the election. Potential post-election effects often see the VIX moving based on market reactions to policy expectations, economic data, and any uncertainty related to the transition. A continued downtrend in the VIX would suggest that markets view the election results as stable and favourable for low volatility. Conversely, any sudden spike in the VIX could indicate renewed uncertainty or concerns about upcoming policies. The current low volatility signal reflects a calm, stable outlook. However, markets can quickly shift if unexpected developments occur post-election, which would likely push the VIX higher. In summary, the VIX chart currently reflects a low volatility environment, suggesting market stability. However, post-election policies and events could impact this outlook, and a sharp rise in the VIX would signal increased market concern.